Good morning, rise and shine, rise and shine. We're going to be trading gold, micro gold futures this morning, live, focused on the process over the P&L. I may take a trade on this session, I may not take a trade on this session, but you will 100% know why I either take a trade or I choose to just be patient, sit on my hands, and even though I'm not making a decision to trade, I'm still making a decision to not trade, right? A lot of the times we think if we're on here, we're live trading, we're on the charts. Maybe you're not even live trading, but you're just on the charts. And what I mean by live trading is streaming. Maybe you're not doing that and you're on the charts. You don't have to take a trade if it doesn't present itself. So I'm going to kind of walk you guys through my thought process in regards to exactly what I'm seeing. And of course, we'll talk about the fundamental factors, the fundamental drivers currently driving the gold markets and the metals market as a whole. But I just posted a video last night. It is titled, don't remember what it's titled, but it's the most recent video that I posted. And I marked up my charts last night. And so if you watch that video and you look at where price currently is now, you'll see this played out exactly how I would have expected it to. Or I'm not going to say expected it to, exactly how I would have wanted it to. And because it did that, I executed last night. And so I took a trade somewhere around, let's actually see where I took that trade at. I entered 48.15. So 48.15, I entered at 8.37. So somewhere around this level. This is the candle that I entered on. Take profit was set right before this decision-making level. Because it was set, I took the trade, set my take profit overnight. I moved my take profit just below this decision-making level. So it was about right in this level, to prevent any potential for price to move all the way to this level and not reach my decision-making level. But as you see, price moved cleanly from one decision-making level, this 15-minute decision-making level, to the next decision-making level. So exactly the reason I did the video last night, it literally worked. Like it was perfect. It was perfect the way it worked out. So woke up to the take profit getting hit. You'll see that 921 is what the trade I took last night. But before we move any further, right, I just really wanted to shine some light on these levels, man. These decision-making levels are just simplify everything for me when it comes to my invalidation areas, my reaction areas, and my take profit areas. If you watched the video yesterday, you'll see that I was looking at this level. Let me use my arrow here. I was looking at this level to see how price would respond to it. Like that is what I was focused on. I was focused on how price was going to respond to this level. And we see that it broke that level and then it started to move back towards it, right? And that's the type of price action I'm looking for at those levels, right? So after it broke this level, I was looking to see how this level would respond to price, or how price would respond to this level. And we see that price resisted that level, moved back upwards, entry came right here, take profit up here, and now we're consolidating at that area of price. So that was beautiful the way that it was set up. And so if you have not watched that video, I encourage you to watch that video. Like anytime that I have a chance to do a breakdown on these key levels, these decision making levels, I'm going to, because I think it's really helpful to just see it over and over again. But also that video that I shared last night, that was like real time, right? I initially was going to just record it and share it with our trading community. And then I was like, you know what, this is a perfect time to share this with those on YouTube University. It's a perfect time to share it just so you can see me in real time go from a naked chart. I completely wiped off my chart. I removed all, um, make sure my mic is on. I think my mic is on. Let's see. It shows my camera is on. Q, go ahead and throw some in the chat if you can see me on camera. You should be able to see me on camera. I can see myself on camera. Go ahead and drop it in the chat for me before I continue any further. All right, we'll spin back around to that. Hopefully you guys can see me on camera. If not, hopefully you can see my screen at least. But don't remember what I was saying. But yeah, decision making levels, money. Give you a chance to see from that video I posted yesterday. Go from a clean chart to my current chart. Like this is my current chart. I did all of this yesterday on the video, and I explained exactly why I did it. I mean, I explained exactly what I was looking for from it, and so on and so forth. So, clean move we got last night. I know we've had a pretty significant drop in gold in the metals market as a whole, like record drops, but at the same time, there wasn't a significant shift from a long-term fundamental perspective that enlisted any type of fear or higher risk environments for me taking buys, right? I still firmly believe that the fundamentals favor safe haven demand in the metals market rising. But I'm not as biased as I was yesterday on that because I had to learn about the initial drop in the metals and in the gold market, right? Because before yesterday, literally before, like as I recorded that video, I didn't have any understanding of a fundamental factor that drove the metals to fall, right? But I was wrong. I was wrong. There was something fundamentally that drove the metals market to fall. And one of those things was the raising of margins for metals, right? And all that means is the amount of money that one must put up to hold a certain amount of gold increased, right? And so let's say you're going to buy 10 contracts of gold and upfront you had to put up $1,000 to hold those 10 contracts. To be able to hold the same amount of contracts, it went up 33% for gold. So that means instead of having to hold having to put up front $1,000, you have to put up $1,300, right? So that was the fundamental driver that caused the gold market, the metals market in total, because this also applies to silver and other metals. But that's why I believe it caused the market to fall, However, I believe that was just a short-term correction. Like gold, silver, it was already extremely overbought. Like if we look at the daily time frame and we look at this area, right? This is on the daily, and so you look at like even where this candle was in terms of the relativity, like you've heard us speak about relativity before. This is the daily, so this MACD is showing a lot of price action. And so if you just look at January 28th, January 29th, you can see that in terms of where that MACD is relative to where it's been in the past, along with price, like there was some very large discrepancies, and it was due for correction. Like it was due for correction. We can even look at the relative strength index, which I do look at from time to time. But if you look at the relative strength index, it shows pretty much the same thing as this MACD would. But some of you may be more familiar with the relative strength index. So I wanted to show that in relation to that um, overbought environment that gold was already in when the drop came, right? So the reason why I decided to gain a little bit more context on the gold drop is because I know that nothing happens in a vacuum when we're talking about the market. Like nothing is random. Like I can almost guarantee that every time the market has done something drastic, there was something fundamentally driving that. And so because that is something that I've noticed historically, that we've noticed historically, anytime something like what we've experienced in the last handful of days happens, like I personally, if I don't understand why that happened, I personally have to gain that understanding and figure out what could have caused that. And I came across that yesterday. And like I said, it was the dropping of the raising of margins, right? By CME, which CME is this. Like the CME group, they're the same entity that we use to look at Fed rate expectations. Outside of that, I don't even know who CME is. I don't know what the acronym stands for. I don't know what it is. To be completely honest, I go here just for the interest rates, just to be able to understand the interest rate expectations, right? But they obviously have some type of significance and some type of influence within, uh, finance, global finance, to be able to raise the margins in metals, right? And so that was done. That happened the same day that Kevin Warsh was um, basically announced that he'll secede Fed Chair Powell, given the Senate approves it, because there's some stuff that he has to go through with Senate for them to approve it. Um, and all the headlines, right? This is where like you just have to do your research. Like that's all I can say. You just have to learn and do your research, because if you just if you just rely on the headlines to tell you everything, then you're going to miss something, because the headlines aren't there to guide us. They're there to influence us. They're there to, I'm not going to say manipulate us. They are there to just influence our perspective in a way that is biased, right? They're not there to just provide information. Like headlines aren't there to just be a resource. They're trying to influence us in some way. And I say that because there was a lot of talks about Kevin Warsh in the headlines, and these entities putting out these headlines, Bloomberg, Reuters, uh, uh, Goldman Sachs, no matter who it is, like I'm just throwing out sources that provide information on the markets. All the headlines that I was seeing was saying, okay, Kevin Warsh appointed or plans to secede, Fed Chair Powell plummets the metals market. And they were correlating Kevin Warsh announcement to the gold market plummeting and the metals market plummeting. And that's not correct. That's not it. That's not why that happened at all. It's just not why. I'm going to tell you why it's not. That's not true in a second. But those headlines are not correct. Like, that is not why. Because if you know anything about Kevin Warsh is at his core, when we're talking about policies and economics, is a dovish Fed chair. Like, he's at his core is dovish towards Fed policy. Like, he's more dovish towards Fed policy than Fed Chair Powell. He still cares about the stability, right? The two mandates from Congress, price stability and maximum employment. Like, that's still important. And so it's not any different there when it comes to him and Fed Chair Powell. But in terms of policy, like, he's more short-term dovish than the current Fed Chair Powell. And so what do we know about policy? Lower rates favors gold. Higher rates doesn't favor gold, right? And so if Kevin Warsh was at his core a more hawkish Fed, okay, I can see the correlation between the market plummeting and the succession of Kevin Warsh once Fed Chair Powell's term is up. I could see that, but that's not the case. That's not even true. There's nowhere that you'll be able to find. I'm not going to say nowhere because there's maybe some sources out there, but from all the sources that I'm seeing, Fed Chair, the future Fed Chair Kevin Warsh potentially is more dovish than anything, which favors gold, right? And so that's why I don't believe any of those headlines to be true. And I knew that about Kevin Warsh prior to Trump announcing that he would succeed Fed Chair Powell, just because there's been plenty of talks around who's going to be the next Fed chair, who's going to be the next Fed chair. And I've already looked into Kevin Warsh. He was also he was even part of Morgan Stanley at a point. I don't remember his exact role, but when I even think about something like that, you're thinking about, we're considering somebody that was in the past part of, such a conglomerate like Morgan Stanley, right? And so naturally he's going to be more dovish, right? He's going to be more dovish. Like, just that's just my perspective. That's how I'm interpreting that, right? And that correlation. So headlines, very, very important to put a bow on this topic. Headlines are very important to analyze, observe, and then validate. Like, do your research. But like I said, the raising of margins, and now I'm actually curious on what the acronym for CME Group is. Chicago Mercantile Exchange. There we go. Now I know. But yeah, they raised those margins on gold and silver by about 30% each. So silver went up by 36%, gold went up by 33%. We also saw, who was it? I have it right here. I was literally just reading it. JP Morgan closed out $10 billion in silver shorts at the bottom of that drop, right? So they executed on the dropping of silver specifically, and they have fill orders set at lower levels, potentially. Of course, we don't know the certainty of that being true, but these are from, multiple sources on the internet, which there are, like, that information for us is available. I don't have access to it, but I know anytime that I've pulled up like an order flow website, it just always requires you to like sign in or pay or something like that. But like that information is available to us. It's not hidden. That's one thing I love about trading. Nothing is hidden from us. Like there's absolutely nothing that we cannot find the truth about, like the facts about, right? So um yeah, that was pretty much it. Um so with that being said, we got the fundamentals out the way. What impacted gold, metals dropping, raising margins, more of a short-term change than a long-term factor. Long-term safe haven demand is still supported when we think about stuff going on with Greenland in the US and all the countries involved with Greenland. I know there was just a 10% tariff put on 8 European nations just due to them opposing the US taking over Greenland, right? So we think about that geopolitical instability, geopolitical instability, geopolitical tensions, right? Um, with US and Greenland and the European nations, right? So that's a fundamental factor that's going to support safe haven demand. We think about the importance of the US taking over Greenland from a rare earth standpoint, right? A fundamental factor that's going to support safe haven demand. We think about That's the other thing too. When I think about Kevin Warsh and him being appointed by Trump with the Fed's independence already under scope, for to where the market doesn't know if the Fed is truly independent or if it or if it's more political now, with Trump appointing somebody specifically he wants on there. What do we think the market is going to interpret that as? They're going to interpret that as the independence of the Fed is deteriorating, right? Once again, that physical instability supports safe haven demand. So like the long-term fundamental drivers, they support safe haven demand. They support metals, right? And so let me separate those two actually. So they support safe haven demand, right? But then when we think about metals holistically, silver has real world application. We need silver in AI, we need silver in solar, we need silver in chips, we need silver for data centers. Like silver is increasing in its real world application. And from my understanding, silver has always had these capabilities. But now with the current era we're in, the demand for that is increasing. And if I'm not mistaken, China is potentially planning to put export controls on silver. So trying to limit the amount of silver supply that can be accessed by countries outside of them, right? So what is that going to do when you restrict supply, right? Demand is going to go up, right? The demand is going to go up. So that's going to support silver increasing. And the same thing with cryptocurrency. When we think about Bitcoin, when Bitcoin is hitting all-time highs, generally all the cryptocurrencies around it within the crypto market, altcoins, right? They also increase because the market is increasing. So I view it the same way when it comes to silver. Even if there was no fundamental factor that was going to drive gold upwards, silver being a metal is going to pull the metals market up with it, right? So copper is going to increase with it as well. Platinum is going to increase with it as well. Like the metals market is going to move together. We're not just going to see silver reaching new all-time highs and all of the other metals are going to be in a bearish move, in a bearish trend. It just won't happen because that's not the nature of the market, right? It's the same thing when we think of risk on and risk off. Like when we're risk on, all the instruments, all the assets that are supportive of a risk on environment will move upwards. All the assets that are supportive of a risk off environment will move downwards, and vice versa. When we're in a risk off environment, all those assets will move upwards. All the other ones will move downwards, right? And so, um, that is really like when I think of fundamentally where we are, like yesterday I was able to wrap my mind around it all and reach that level of understanding of where we are, right? After all the craziness of gold over the past few weeks, or not the past few weeks, but the past week. And so that's the place I like to be. I never like to be on the charts and not understanding the story that surrounds it. Because then I'm just trading blind, right? I'm just strictly trading off technicals, and technicals aren't enough, right? You can profit from technicals. You can make some money off technicals, but over long periods of time, eventually you'll run into something that was unexpected, and then you could blame your strategy. You could blame factors that aren't even there to blame, that could then allow us to spiral into, you know, the type of trader that we don't want to be, right? So, fundamentals, we will 100%. Every time you watch a video from us on YouTube, anytime you hear us in the community, anytime you see us on here live trading, like we're gonna talk about the fundamentals. We're gonna talk about the macro forces driving the market. We're going to talk about it 100%. You can guarantee it because we have to. We don't have to. It's important for us to know the full picture, right? As Ray Dalio says, everything looks bigger up close, right? This drop in gold looks extremely big when we're looking at it up close, right? But when we take a step back, we understand what's driving it. It looks a whole lot different, right? It just looks a whole lot different. It allows us to execute and use that historical context to move forward and to have more clarity going forward. So, but yeah, that's pretty much the fundamentals, right? That's the fundamentals. And so, what am I looking for today? Let's check. Let's run through it because we got to check. And if you were on with us last week, we're gonna look at our Forex Factory. We're gonna look at Forex Factory. All right, we're gonna check what news is on the agenda for today. And as we see, there's no news on the agenda for today, which is honestly a win. Like I like when there's news on the charts, when there's news, like when we're trading on news days. Um, but I also like when we don't, right? So I like when we trade. I like when I'm trading and there's news on that day because it's about 75% chance we'll get some good movement, right? Usually that movement will happen after the news. So that's why I like trading when there is news, but I also like trading when there's not news because it allows everything that has happened already to drive the market, right? So today that could be the raising of margins. What I just talked about at the beginning, that could drive metals lower today, right? It could be the other fundamentals that I've mentioned, the larger, longer term fundamentals that drive metals up, right? And so we're able to still use everything we've learned to gauge the level of risk associated with taking buys or taking sells, right? And so no news really today. I have been seeing this right here at the bottom that there may potentially be a government shutdown, right? It seems like we're in government shutdown environment. I don't know why. Um, I'm gonna have to look that up right now. So let me do this. I started seeing that last week, um, about government shutdown, but I haven't seen anything pop up. I haven't seen anything on TradingView, any news articles, but like that's something to be aware of because if this was the case, like I'm going to associate government shutdown with safe haven demand. Why? Because that is instability. That is one country, the US, not being able to come to an agreement between internal parties. Like that's internal instability. And if maybe you didn't know this, maybe this is your first time hearing it, but um there are more people involved in the US market than just people in the US, right? So when we think of investors, we also have to consider foreign investors. And if there's people outside of the US investing into the US, then you also have to consider there's people in the US investing into things outside of the US, right? And so I say that because internal instability impacts all investors, right? Not just US based investors, it impacts all investors. And so, what does that do? That encourages them, influences them to allocate elsewhere, allocate into gold, allocate into silver, allocate into other markets, right? That are not impacted by the internal instability of the US, right? And so, let's see here. So as of today, the US is in a partial shutdown. Funding lapsed and some agencies are operating with furloughs while Congress works a deal to reopen the government. Like we've seen this story before. We had a shutdown, that partial shutdown that lasted like the longest on history, literally at end of Q3, Q4, maybe that was Q4. Um, and how did that impact the market? Well, it impacted the economic data for one. So it impacted how the Fed made decisions, right? Which how the Fed made decisions impacted the market, right? And there's just this, it's just this thread of different forces that impact the market. We can't look at this stuff in a vacuum. There's not one factor, just there's never just one single solitary factor that is impacting price. It's the collection, it's the compilation of all of the forces driving price. Yes, some of those forces are greater than others. Some of those forces are not so great, but they are still contributing to the movement of not just gold, like not just metals. That's what I trade. That's what we trade. You know, there are some other assets that we trade. I'll always, for now, simply just trade gold, but the fundamentals impact every single financial instrument, cryptocurrency, stocks, individual stocks, indexes, ETFs, right? Yields, Forex, it impacts everything. You can't escape the fundamentals. You can't escape the fundamentals. So you might as well learn what the heck they mean. But aside from that, um, no news today. Current environment is government shutdown. So that was number one that we were gonna look at was a forex factory, and then we'll look at baby pips. Take a look at this risk meter. You see we're currently in a risk on environment, currently in a risk on environment. Gold is still in a risk off environment, heavy risk off environment. And so that's that. This is kind of the climate we've been in with gold though. Like during its push, like reaching new all-time highs, I don't ever really remember seeing our risk on, risk off meter ever on this side. Like, I don't ever remember seeing that. Like at the very least, we've been neutral. But this is kind of this is the climate we've been in with gold. And so a lot different than previous climates to be able to say, okay, when we're in risk off, like gold's going to go up. When we're in risk on, gold's going to go down. And it hasn't been that cookie cutter, which is how it happens sometimes. And that's why we have to understand the forces that are driving it behind that, right? So no news today, risk on environment, um, government shutdown, Kevin Warsh looking like the new Fed chair president, raising of margins on the metals market, causing the recent drop, right? Um, Fundamentals still supporting gold, moving bullish. Like there was an article I was reading yesterday where somebody was saying, like, this is not the end of the bull run by any means, right? When it comes to gold. So um, today I'm gonna play it exactly how I would, and that's I would not gonna say favor, but I'm looking to take a buy. I may even get one soon. 40 points. That's significant. Let's see. That's just that would be my traditional risk, right? But $410, 41 points, that's too significant for me to risk. So I'm gonna scale down to my 1 minute. That's it's about 250. That's right under my threshold for how much I would like to risk. So I'd be looking at something like this on a buy, right? I want to fill this area of imbalance, and I want to. This is what I'd be looking for if I would take a buy. I do see on this 5 minute charts, like we're having some struggle with buyer's volume here, right? We see got that gray bar coming in, so buyer's volume is struggling. 15 minute, no buyer's volume yet on the 15 minute, which is good, or it could change quickly. I say it's good because if we get fresh buyer's volume, like that's encouraging for me. But nonetheless, I'd be looking for a buy somewhere around there, or I'd be looking for a sell. Why would I be looking for a sell? Why are you looking for a sell, Marcus? If you're favoring, if the long term fundamentals are favoring gold buys, because there are short term fundamentals that are putting some downward pressure on gold, like the raising of margins. Like that one by itself, like that's a pretty big one in my opinion. Like investors now got to basically spend an extra 33% to hold the same amount of gold. Like that's significant, right? That pretty close to 50, pretty close to 50%, right? And we already climbed to all-time highs. That doesn't mean we can't climb to new all-time highs. Um, but I mean, we've seen this story before. Like, how many times in the past have we hit all-time highs and then corrected off of those all-time highs for a good period, right? Before we then reach new all-time highs. Am I saying that's what's going to happen? No, I have no idea what's going to happen. I have no idea where the bottom is. I have no idea where the top is. I don't care to know. I don't care to know where the top is or where the bottom is, right? For all we know, this could go to 10K by the end of quarter two, right? Nobody knows, right? Even institutions that predict prices, right? Like they don't know. They don't know. Um, so we just use the information and we execute on it. Like, so I have two trade ideas right now for what I'm looking for. I'm either going to take a buy or I'm going to take a sell. And either one I could be wrong on, right? I could be wrong on both, right? I could take a buy, it could kick me out. I could take a sell, it could stop me out. Like, and I was just wrong today. You know what I'm saying? So we play the game of probabilities, man. We play the game of probabilities. Yes, exactly. Q said rarely the furthest he's seen that risk on risk off meter is about 10 to 11 o'clock. So with that risk on, risk off meter it's never been, hasn't been in risk off in quite some time. Um, but deterioration of money order or monetary order, that's good. That's good. That's good. I love that. Always got to make sure I'm checking the chat, checking the chat. Um, so yeah, I wanted to put you guys on something as well. Us over here, Q and I, we're all about maximizing productivity, being more efficient, um, organizing our resources. And so I'm going to show you guys something here in a second, unless I get some movement that entices me to take a buy. And so, shout out Jason in our community. He had posted in our community something about um, just the traditional movement of gold right now. And I knew exactly what he was talking about because I've experienced this. So like you see my stop loss right now. My stop loss says 39 points, right? That you see that little red right there. It's 39 points. So one of the reasons I also love trading gold is because it's super easy to calculate my risk. Like I never am guessing on what I'm risking on any single trade. Um, so that's, I'm sure it's simple on others as well. The more you get used to it, but I'm just used to gold. But so that's about $400. Traditionally, me taking a move exactly like this with this exact setup, those 39 points are maybe like 15. Like instead of it being me risking 39 points, I'm risking 15 points. But because, and I'm really not sure why, like maybe this is something I'll look into. But with how, let me say, liquid and volatile gold has been, it's caused moves to be a lot more significant in terms of a point movement. Like from this entry to this fill of imbalance is 163 points. Traditionally, that's like 60 to 70, maybe, like maybe 80, but we're pushing over 100 from current price to here. Yo, that's yeah. It was just funny that he posted that because I'm like, yes, you're 100% understanding that correctly, and yes, we are experiencing it. And so with the current climate, um, I'm hyper intentional about cutting the cord quickly. And what do we mean by cutting the cord? This is something that Q said in one of his previous videos. But when the market starts to invalidate us, like cut it, just close it right away. When we start to get invalidated, the market is trying to tell us that we're wrong. Um, you know, just close the trade, right? And especially in this environment, because we can always get back in, but like it just doesn't make sense for me to say, okay, this is my primary invalidation level, and then let price go down $410 just because that's greater than my traditional risk. I only like to risk at most 250 on every single trade. Sometimes I'm not, I'm bad, and I don't follow my damn rules. And then the market always reminds me, boy, follow your rules. And I don't like those reminders, but I need them sometimes. So yeah, I'm enticed by this trade. I want to see on this next candle. So we got 30 seconds left on this candle. This decision making level just formed, and I would love to take this. I would love to take this buy right now. I would do something like this. So that would be, man, these decision making levels are just so money. Like they're just so money. But this will be my invalidation level now because I have this decision making level here. I have a fresh level of invalidation. So if I take a buy and the market comes through this, like I'm just gonna cut it. I'm just gonna cut it because I have a decision making level, something that I've used historically to tell me when I'm right or when I'm wrong. And I'm gonna take this buy.
Order filled.
We're gonna take that buy right there. And we're gonna take it to this imbalance fill. Take it to that imbalance fill. Decision-making level, 3-candle structure. They appear on every single time frame. Every single time frame. And why do I love where this one showed up? Because if we just put that box to the left, we see price has already engaged with this level and resisted this level, right? Like if we even come back a little bit more, price climbed, right? Climbed, all the way to this decision-making level. This one right here. Okay, we broke above it, and then we just kept bouncing off of it. Came back, bounced off of it. Came back, bounced off of it. Came back. Now we're at that level again. We got a fresh decision-making level, and now we're breaking through that area that we initially, had resisted, where that force field, boom, boom, like running into a wall, boom. It's kind of like I watch too many like FBI shows. Like I'm a sucker for a good FBI show. Not like Law and Order SVU, like not that type of FBI show. I'm talking about the FBI shows where, you got a kingpin or you got a serial killer and they don't know who it is, right? And they go busting in doors. I was just thinking about that thing that they hold with two hands and they boom, boom, and then boom on that third one, doors open, put your hands up. And so that's kind of how I look at those force fields. Those force fields operate in the same light. Maybe I didn't need to use that analogy specifically to describe that, but maybe I just wanted to talk about something I like to do, just so you guys know, okay, if I ever see a good crime or a good FBI show, I need to message Marcus and let him know, hey, you got to watch this one, man. And I would appreciate that, actually. Anyways, yeah, I'm sending this trade right now. I got about 13 minutes left on this live stream before I get to put on the work clothes, get my butt over to work, make something happen. This was in a daily imbalance right here that we're moving into. I also, like, I'm gonna say it again. Just go watch the video from last night that I put that we posted to the channel. I was so happy that I recorded that video because of the way it worked out, but also just the like you get to really see the process in that video, right? Start to finish. I didn't really go over like what the 3-candle structure is. Like we've done that in previous videos. But in terms of just the overall process for me setting up my chart, like it was ideal to go over. Like, and so that area of imbalance, that daily area of imbalance, this current orange box we're in right now, like I marked that up yesterday. And so we've already moved into that area of imbalance. So we can slide this up to current price. And now this is the area that we're looking to fill. This is the area we're looking to fill. Oh, I'll show you guys this real quick while price is moving. Let's see 15-minute there. Oh, here we go. Look, this is what I was talking about a second ago. 15-minute a few minutes ago, it didn't have any buyer's volume, but now we're potentially getting fresh buyer's volume. And just like the decision-making levels, the higher the time frame, the stronger the price action. And so if I'm getting fresh volume on my 15-minute, right? If that persists, then just like down here when we got fresh buyer's volume, right? Like when did that fresh buyer's volume come in? Let's say, okay, right here. So this candle right here is when fresh buyer's volume came in, and look where it took price, right? That's on the 15-minute. So the same is true for where we're at currently right now. If we get fresh buyer's volume and that buyer's volume persists, like it's not absolute that it's going to stay, because buyer's volume could come in just like it did here and then go away and then come back and then go away, right? And so, but it gives us an idea that we're getting some fresh movement, right? Some fresh bullish movement. And so if price breaks this decision making level, I will cut the cord. Cut the cord. This is my invalidation area. I can always get back in, and then we go from there. So this is a really good time for us to just watch. Let's just watch how price interacts with this 5-minute decision making level. Right? We already seen it come down and basically wick off of it, right? But let's just see how it keeps unfolding. We have about 2 minutes left in this candle. So let's just see how it unfolds. But specifically at this decision-making level, I kid you not, guys, like I'm gonna take these decision-making levels to the grave as being the best. And usually I don't say that type of stuff in trading because there's no like best. Like there's no best strategy. Like I hate when I see stuff like that. Like the best trading strategy ever. Like, bro, come on. Like there's millions of trading strategies. Like you're really gonna say that one's the best? Like, have you tried them all? But listen, I can say that about these decision-making levels because you can only mark up key levels so many different ways, right? This three candle structure, the best way to mark up key levels. It's easy to see, it's fast, it's simple to do, and it's consistent, right? It's consistent. So this is a great time for us to just watch price action at this level. Okay, we get the break.
Order filled.
Cut it. Cut it. And now we see what price is going to do, because price could come down here, right? And it can do something like this. And it could go back up, or it could do that and then go down, right? Like we don't know what's going to happen. If you ever watch this live stream and Q or I ever say anything like, we know this is going to happen, please report our channel. Please report it. Just report it. You don't got to leave a comment. You don't got to put a thumbs down. Just report it. Just report it. Because like that, we shouldn't be doing that. Just report it. Just say these people are lying to the public. Because we don't know what's gonna happen. We just we respond. We don't react. We respond. We don't know what's gonna happen. Let's see what price is gonna do though. Another thing to remember about these key levels is they are just ranges of price. Like, just because I have this decision making level and it's currently at 4957.1, 4957.1 isn't like, there's a radius that covers, right? Like, so what I mean by that is this decision making level is just this range of price that I'm using it for, right? So I say that because even if price comes down here like this, comes back up here, like I'm still using these levels as a way to i- identify reaction areas, right? So don't panic when you see, like, just because price came below this 5-minute decision making level, I'm not like, okay, like, let's take sales. Like, no, that's not what I'm thinking. Right? Just because it's just a range. But what I have done in the past, and I'm glad I'm on this live stream, because if I wasn't on this live stream, I probably would not have closed that trade, because I would allowed those thoughts to creep in, like, just wait to see what price is gonna do. Like, just wait. But like, no, just cut it. Because what has happened before, guys, I kid you not, is this same candle that stopped right here, it would have just kept going. It would have just kept going. And then eventually I would have got to this one and I would have said, okay, now I'm at $400. Like, let's cut it. Like, not just, so I'm glad I was on here to do that. But um, yeah, so I say that because this is just a range. It doesn't change just the trend right away, right? Like, I would say if we broke this 5-minute decision making level and we kept going downwards, I would then be more supportive of sells. But right now, we've respected this 5-minute decision making level. We have imbalance above. We have the fundamentals to support safe haven demand. Like, I'm favoring buys right now. I'm not I'm not only favoring buys. Like, I have an idea for what I'm looking for to take a sell, and that's simply us breaking this 5-minute decision making level, right? Taking out this low, right? Breaking after we break that 5-minute decision making level. Like, that's what I would be looking for to take a sell. And then of course my our VXT confirmations, which is like putting a cherry on top of our analysis, our confirmations. And that's what our confirmations should be. Like, we our technical confirmations should like be the the sprinkles on the freaking cake, and all the other stuff that we're looking at, like the fundamentals, the levels, right? Those kind of make up the cake. And then our confirmations tell us, okay, time to eat. Sprinkle that on there, time to eat, right? Hopefully that analogy made sense. But get what I'm trying to encourage those watching this to understand is the technical, your confirmations, however you enter. Maybe you use indicators, maybe you don't, but let those confirmations be the final bow on the gift, right? Don't let it make up the entire gift, because then you don't really know what's influencing your system to either prove you right or prove you wrong. You don't know what's influencing it, right? And that I think that's really important to if you leave this live stream, like, just remember there's more to it than the technicals. And so we can't just rely on one component of a complete system, right? That's like only thinking that you have to put gas in your car. Bruh, you have to change the oil. You have to make sure you got tires that are not bald, like I don't know, somebody that's bald, Charles Barkley, right? You got to make sure your air conditioning's working, right? You have to make sure these things about the car are intact. And then the gas in the tank is like, okay, now it's time to go. So hopefully that analogy was a lot better than my sprinkles analogy. Like it is a little bit early to be thinking about cupcakes and sprinkles, but maybe you got a sweet tooth. Maybe you got a sweet tooth. If you do have a sweet tooth, I'm going to encourage you in a couple years to go see, my boy Q, because he will get you right. If you got a sweet tooth now, listen, that that stuff gonna build up. I'm not even sure what it's called. That is gonna build up, but it's gonna build up, and you're gonna need a dentist. So you better go get right. But it's about 7:01 now. So what I'm gonna do is I'm gonna stop sharing my screen. You see current price. You see my P&L. This started out with what 900 on the day. I took $140 loss. Cut the cord quickly. Um, Still looking for buys if they present themselves. Um, I would take a sell if it presented itself, but like I said, my ultimate area that I'm switching from, okay, I'm not looking for buys anymore, I'm looking for sells, is us breaking this 5-minute decision making level. Um, we still have, a good amount of time left in this New York London overlap. So I don't think the opportunities are over by any means. However, that doesn't mean that I'm correct. We could get an environment where we just consolidate, consolidate, consolidate. If you look at my chart, you see I have two levels. I have one here and I have one here. And so everything that happens within this level is considered a no trade zone for me, right? So anything that happens in this level, I don't take any trades. A buy has to come in above this level or a sell has to come in below this level, right? If I take buys, I'm targeting this area of imbalance above us. If I take sells, I'm moving to the next decision making level. Um, I'm moving to the next decision making level, which is literally the inverse of the trade I took last night. I took a buy from this decision making level up to this one. And so if we break this decision making level, I would be taking a sell from this level down to this one. It's just funny how that works. But that's what I'm looking for. No news today. Remember that the fundamentals, there are some short-term fundamentals that could cause metals and gold to fall some more. But we also have to remember as well that institutional buying is not stopping. And so even though we had that initial drop in gold, like I anticipate institutions, hedge funds, conglomerates like Morgan Stanley, like JP Morgan, um, I can see them buying the dips, right? Buying the dips, pushing price back up. Does that mean we'll go make new all-time highs? It could be, but I'm not worried about us making new all-time highs right now. I'm worried about us filling this imbalance, right? Um, and so that's some things to remember. Government shutdown. We are in a partial shutdown. Trump did announce 10% tariffs on 8 European countries. So like just consider all those fundamental factors and variables when we're making decisions and allow our technical confirmations to put a bow on it, right? The last thing I want to show real quick before I jump off is like I said earlier, me and Q are big fans of efficiency and productivity, and this is something that I've grown to really like a lot. And this is Notebook LM. If you don't have a Google Business account, you would have to pay for Notebook LM, but if you do have a Google Business account, then you have access to this for no additional cost, which to me is pretty amazing because you can like leverage the Google Business account that you have to be able to access these different AI tools. And this one specific is called Notebook LM. And what it does is, if you look right here, like we were able to upload all of our sources that we have, not all of them, I did have to delete some. I only inputted the ones that I thought were highly valuable. But you upload the sources from your research, from whatever it is that you've created this notebook for. Like this one is for macro context, right? So I called it the macro mind. It's corny, but I like it. So what? But you create the notebook for whatever you want. So if I wanted, like if I was a chef and I had all my recipes, right? I could upload all of my recipes in here and call this chef, Marcus, right? And then I can come in here and ask it a question about a specific recipe that I have already uploaded the sources for. It's different than like a ChatGPT or a Gemini because it's only going to pull your sources that you've uploaded, or you can do this deep research function or fast research where it's going to surf the web for sources, and it's going to give you the ability to add those sources that you found through the web to your database, right? But I really, really love this tool because I can basically take all the research that we've compiled and that we continue to create and um, uh, save, right? All the research that we create and continue to save, we can just upload it and update it and update it. So like these are all in Google Docs. And so when I click on one of these, it will tell me to sync with my drive, but it's already currently synced with my drive. And so what I'll do is I'll upload a new source to Google Docs. I'll come in here, find, the macro gravity scan, click right here where it says it would say sync right here, and then it would update the new um, information that I put into that doc. But then you can come in here and literally ask it a question. Like this morning, I asked based on where we currently are with the research done on February 3rd, like what are the main impacts driving the market, right? And then it pulls our research, the research we did, and it pulls that and it puts it based on the question that I asked, right? But it's a small plug for Notebook LM for using AI efficiently, using it to learn. You can also make slide deck. You can make flashcards if there's stuff you want to study. You can make a mind map, right? There's a lot of stuff you can do that you can use it to study. Um, based on all the sources that you gave it. So I just wanted to share that. I think it's super helpful. But other than that, I think it was a great session. We were able to really see those decision making levels um, act with price. We were able to see what it's like to cut the cord, right? Like I want to get on here and everything that I'm talking about, I want to be an executor of. So I want you guys to be able to watch this and see, okay, when he gets in a drawdown, he doesn't panic, he follows his plan, right? It's about the process over the P&L. The P&L will take care of itself. I promise you that's true. But other than that, like I said, I think it's a great session. If you have any questions, you have any comments, you didn't like something I said, you should probably just keep that part to yourself, right? Because if you didn't like something I said, I don't remember saying anything terrible. So unless it was, never mind, disregard that. But put something in the comments, questions, your feedback, right? If you've found something fundamentally that you notice could impact the market in the future, share that with us, right? We love the fundamentals, right? And so we're always open to understanding more about the fundamentals, how it pertains to global markets, how it pertains to gold. But other than that, if you've made it to the end of this live stream, do not forget to, what am I going to say? What am I going to say? Subscribe, like this video, because we know that helps push our YouTube channel to the top. Like this video, go watch the last video that we posted. Q posted one, then I posted one right after that. Share our videos with people that you think it would help. And don't forget to turn on your notifications as well, so you know when we post a new video. We're up in the output on our YouTube channel, and we don't want you guys to miss anything. But other than that, I am co-founder of Bloom. Marcus. I don't really like saying my name out loud. Um, I don't mind it, but I always wanted like a cool like Quentin. He has Q, right? I think that's cool, right? And so I'm Marcus. I mean, I go by EHM on the side, right? But like I guess you guys are gonna see me on these live streams under the real EHM. So let me just say that. Let me reverse. Let's just rewind that. So with that being said, I'm co-founder of Bloom, EHM, the real EHM. That doesn't even say. I gotta let that roll off the tongue better. I'm gonna get better with that. But other than that, I'm out of here. I'm about to get ready for work. Appreciate y'all tuning in today. So stay consistent, stay disciplined, stay patient on the charts, and don't let the P&L drive your decision making. Allow your process to drive how to allow your process to drive the outcome of your P&L, right? And let that be. It's the game of probabilities. We can't win every trade. All we can do is follow our process and let the outcome take care of itself. But we'll catch you guys back Thursday. Q will be live Thursday, 6 a.m., 6:30. But we'll post a video like we'll schedule it so you guys will see what time we'll actually be live, but it should be around 6:30. But other than that, the real EHM is out, and I hope you guys have a blessed day. Peace.